The Morgan Report with David Morgan.
David Morgan, themorganreport.com, with the weekly perspective for the week ending 18 June 2021. Well, I'll start off the stock market. The Dow Jones Industrials have broken their short-term uptrend, 50-day moving average, and confirmation of the S&P isn't there yet, but it's pretty close. So are we at the top? I am very reluctant to say, but I will tell you that the insiders are selling a great deal of shares. The way the market works, and this is one of the best books I ever read on, I forget the title, but it was basically accumulation phase, where stocks are accumulated, then the markup phase, which is when the stock goes from 5 to 50 or 5 to 500, and then the distribution phase, where the accumulation has taken place, the markup has taken place, and now all those big gains by the insiders, the smart money, the institutions, whatever you want to say, will distribute the stock to somebody. In order to realize those gains and book them, they need to sell to somebody. And that's what is taking place now. So am I calling the top? No, I'm calling for caution. Moving on to the metals, it was not a great week for the gold and silver investors this week. And if we just quickly, I'm on Kitco. I'm just trying to be showing a 30-day chart, pretty crude, but you get the idea. And I know anyone following the precious metals already knows what I'm about to say, but we're doing a high-level consolidation here, basically between 1860 and 1900. And if you're going to trade this, you would do a channel formation. So you would have a channel at 1860, you draw a straight line across there. You'd have another channel at roughly 1900, drive a straight line above there or at that level. And if the market broke above the 1900, you would go long. And if the market broke below the 1860 level, you would go short. Now, I don't short these markets. I do hedge once in a while, but only the positions I own. In other words, a true hedge. If I own, make up a number, 25,000 position on a stock or whatever, I would hedge about that amount. Regardless of what I do, we've got creamed. You can see broke the 1860 level. It's down almost $100 on the week. Not a happy week, or excuse me, the last few trading sessions, as you can see, 1, 2, 3, 4, 5 approximately. And silver looks equally as dismal. And again, it was a high-level consolidation. It's been doing this for a long time. I just showed in 30 days, but you could take it much longer. And art, not a science, but we're looking at a very tight channel, really, between 20, at least in the 30-day, between 27.50 and 28, basically. Again, the same trading technique applies. So silver went from 27.50 down to not quite 25.50. So let me just stop there and say what happened. Obviously, what happened was the prices dropped substantially. It was futures driven. It was not a bunch of sales of physical metal. I checked with a few trading desks, not only in the North America, but also in Europe, and I don't have access to every single one of them, but these are pretty substantial, and no one was calling up and selling vast amounts of physical metal. It all took place in the synthetic markets, the futures-driven markets. As most that are familiar with how these markets work are no surprise. They've seen it again and again and again. And here it is. What will be interesting is to see how the Commitment of Traders report comes out in the next week or two, see how much short covering has been accomplished, see if this is a precursor to the banks going the other way after the Basel III is taking place on the 28th of June. I'm neutral on that. I really don't know what it's going to do. I suspect it isn't going to do much, but I'd love to be proven wrong, that it's a huge factor in helping the gold market remove a lot of, let's say, some of these hypothecations that have taken place for so many years. Not convinced by reading it, but again, remains to be determined. And this week, I thought I'd do something slightly different. I put a lot of effort into what I do, along with my staff. They all work very hard. And this is a missive I wrote recently. It had to do with the proclamation that the U.S. Mint made that there was a worldwide silver shortage. It got a lot of people very excited, and I said at the time it was kind of an overstatement and looked for some type of restatement, which was issued clarifying that there was a shortage of blanks, which is the silver 1 ounce blanks, which are then pressed by the U.S. Mint with the Silver Eagle. And of course, they're also changing a security feature with them. So that's part of the story. And as I say here in this missive, the rest of the story is that there isn't a worldwide shortage of silver, best I can determine. But the market is much tighter than what the current price would indicate, especially with the sell-off that I just spoke about. Cryptos have cooled off. It's interesting to see that some of the people in the cryptos have moved back into the metals. I'm favorable to the metals and neutral to slightly positive on the cryptos and free market. You want to buy them, buy them. Buy the heck out of them. I do emphasize you get on our free email list. You won't miss these weekly perspectives or basically anything else that we do in the public sector. So I talked about the 2021 World Silver Survey from the Silver Institute. And I did this on a private forum, the Metals Investment Forum, but this is just a brief summary of what I did on that broadcast very recently. And if you look at the charts, and this is all PowerPoint that I went through chart by chart and spent, a couple minutes explaining each one. This is a brief summary. If you look at the past 10 years, the supply is pretty flat in silver. It's actually tapered off the last few years. And then the USGS reminding everybody that the United States Geological Survey has said that silver would be the first to go off the periodic table. But there's more to that story. At $28 silver, could be the first off the periodic table. And that's a metaphor. I mean, silver isn't going to there won't be any, and there'll be above ground supply and all that. It's just that the supply, according to the Geological Survey, there is not a lot of silver left in the ground. That's what they're saying. But what's uneconomic now, 28 could be very economic as 158. And that would mean that rather than running out in the projected decade or two, it could be, much longer. So keep that in mind. There is going to be a huge increase in the amount of silver used in industry. It's actually been flat for a while, but with the solar push, the green energy push, and what's happening with silver and printed and flexible electronics, according to a study done by a market trend report that was issued and performed by the Precious Metals Commodity Management team, which I'll be doing an interview with on the Mastermind group, that by 10 years, so 2030, 80% of the market will be industry. Now, that's a projection, that's an analysis, but the trend, I think, is valid, and whether it's that big or bigger, I don't know. What I do know is that the trend is changing. Will there be more and more silver used by industry? But I also believe there'll be more and more recycled, and that's due to a company that I'm familiar with and favorable with, and also a shareholder of. And I will be putting that out, and I have already. I'll do it a few more times on the free list, so you can have it for free. I'll give you the link. You can see the videos. You can get the company symbol, everything about it, and realize it's a speculation, realize that I am invested. And of course, I'll disclose that to everyone. So moving on, talked about the effects of the global COVID that was mentioned in the World Silver Survey. And of course, that curtailed production, and gave you some numbers to think about it. I said that we see more and more people coming in this silver, especially 2020. Institutional investment was basically off the charts. I haven't seen that kind of thing in ever, as far as I know. So that's it. Another was the recording that you can probably see at the hot link if you're on our free list. And again, just go to themorganreport.com to sign up for our free email, free newsletter. Of course, there's a subscription service as well. If you're so inclined, just go to the subscribe tab on the main website. You can draw down and see it and make a determination if it fits for you or not. And lastly, if you go to the About tab, and you can read the biography, which probably it's up to you, but below that is the hot link to the film Four Horsemen film. And that film is a very good review of what's going on in the world even now. Even though the film is several years old now, it's still very, very pertinent to what's happening. And it's also a good precursor to someone that's kind of just waking up or maybe questioning what's really going on. It's an hour and a half, probably suitable for any time, but weekends especially. And it may be a Father's Day gift to some of you that want to send something to your dad to kind of put him on, let's say, a different path thought-wise to make a determination and maybe fill in or connect some of the dots, because there are a lot of people out there, in my view, that are waking up to this whole interesting paradigm that we find ourselves in with the power mongers that wish to control our lives more than most of us want them to be controlled. I'll leave it at that. I will come back next week with another perspective. This is David Morgan of themorganreport.com.